Why are base metals jumping at shadows when it comes to Chinese economic news? What would it take to establish a meaningful downstream process industry within Australia? And after 9 years in government, why is the coalition suddenly insisting Australia develop a nuclear industry? And more importantly, what would it take to make that happen? I'm Shae Russell, and welcome back to Cocktails and Commodities, the resource podcast where macro analysis meets mining insights. Make sure I'm always in your feed by giving this podcast a like, and please remember that all information in today's podcast is general in nature and not financial advice. Joining me for a slightly provocative and thought-provoking discussion today is Clyde Russell, the Asia commodities columnist for Reuters. G'day, Clyde. How are you?
I'm very well, Shae. Nice to see you.
Now, we last caught up at the LME Down Under dinner, and I have to say I was quite captivated with some of your opinions on things. Now, you have some absolute zinger of topics that you want to talk about today. But first and foremost, I want to talk about China. We're going to start here of what accidentally underpins the Australian economy, or essentially another way of putting it is Australia has hitched their economic wagon to China's horse. Let's talk about how metals are reacting to China's economic movements, because it seems right now things like copper and iron ore are jumping at shadows, all depending on what tiny bit of good news or bad news China puts out.
At the moment, if you're actually looking at the price action, particularly for iron ore, it's a headline-driven market at the moment. You get a couple of positive headlines about Beijing doing some more stimulus, and bam, you add $5 a ton to the iron ore price. Conversely, you get a few bad headlines. The PMI falls again, property sales look weak, and a bit of froth comes out of the market. What I tend to do when I look at these sort of things is, what's the underlying information? What is it telling me? So there's a couple of things there. One is that China's iron ore demand has actually been fairly robust this year. It's up 5-6% from 2022. They've been importing the stuff, and they seem to be running their steel mills at reasonable rates. The other thing that I think is a fundamental driver is their port inventories are very low at the moment. And we've actually seen them fall to multi-year lows. I think it goes back to 2016. So on that basis, you can see that they have a need to continue their iron ore imports. I think if you actually were to sort of say, well, what is the outlook beyond the next couple of months, is are we actually going to see the property sector in China recover from the start of 2024? And I think that really depends on whether Beijing can actually get those stimulus measures to work. What they've done so far this year, I hesitate to use the term half-hearted, but they haven't really gone full out to get that sector off the ground and running again. And I think, there maybe is some realization that they're going to have to do more if they want to, make the property sector strong again. And if that does happen, we'll start to see the impact of that from, the first quarter of next year onwards. So overall, you have to say that the iron ore picture is pretty good for China, even though the Chinese economy appears to be in somewhat of an L-shaped recovery. And, it's just sort of bouncing along the bottom, but it's not, how could I put this? The thing about China is, even China growing at 3-4% is actually still, it means it consumes an incredible amount of commodities. And, that's not a story that's going to disappear. So, the sort of longer term trend is, even as China's growth rates sink to levels more associated with a developed country, they're still going to be taking in an enormous amount of commodities. It's like Japan, but 10 times bigger.
You've made an excellent point there. Even growing at 3% per annum, that's still an enormous growth rate by Western standards, and that's still growth. One question I just wanted to come back to, something you said there, is I've been quite critical on this podcast saying that there is no big bang in stimulus measures coming from China to lift the property sector. Am I incorrect?
No, I don't think you are. I think what they're doing is they're incrementally adding things. So, what you've seen so far, sort of some monetary stimulus, and so far as the banks can lower their reserve ratios, you've seen them take steps to make it easier for first home buyers in certain locations, that sort of thing. The big step that they need to take is improve the balance sheets of the big developers, whether they do that by forcing them into mergers or takeovers or things like that. If I see that actually happening, then I'll sort of say, yeah, well, that's a very positive thing. Because right now, if you actually look at how Chinese property is marketed, sold, constructed, if you are wanting to buy something off the plan, and there's probably still quite a lot of demand for that in China, you're taking, as an individual, as a buyer, you put a lot of risk into the developer. That developer has to actually stay afloat, has to complete the property, and has to hand it over to you. If there's a lack of confidence in developers, then people aren't going to give them their money effectively. So that's why you've seen the sort of problems in the Chinese property sector, is because the public has lost a bit of faith, maybe quite a lot of faith, in the developers of properties. And that is sort of feeding through. So when I see Beijing take real concrete steps to ensure that those developers are put on a sound financial basis, then I'll be much more confident that the property sector has turned the corner.
This might be a completely unfair question because it's such an in-the-weeds topic where I'm going next. And this is the profitability of steel mills and to a lesser extent other part of copper refineries. There's been periods of time over the past couple of years where steel mills have been running on razor-thin margins because I guess local provinces and state governments were more interested in the production of steel and they were subsidising the market somehow. So I understand that China is consuming a vast amount of iron ore at the moment still, but could we say that their mills are actually running on profitable, healthy margins, or have they narrowed them down to razor thin?
Well, it is a bit of a movable feast.
Obscure topic.
No, it is a movable feast with margins for the mills. I mean, the latest sort of data I have on that suggests that their margins are okay, but not stunning. And it's enough for them to run at reasonably high capacity rates, somewhere in that late 70s, early 80% of capacity. I think the sort of problem for steel mills is always, will Beijing force them to curtail production because they don't want to see steel production rising too high? I mean, there's all this talk of informal targets that they're not allowed to produce more than they did in 2022. I think 2023 will see an increase on last year, to be quite honest, unless there's a massive curtailment of production in December, which seems unlikely. I think you've also got to look at China is, as we know, it's not a pure market economy. It is subject to a lot of policy imperatives, and right now the Chinese government wants growth, and an easy way to get growth is to make steel. It's just like they do this with refining as well. If they want growth, then they issue export quotas and allow the refiners to export diesel and gasoline, and it doesn't really matter anything else. That they will act to reach policy imperatives. So they want growth, they'll make sure that they get it. So I think that's kind of you've got to also keep that in the back of mind. And I think at the moment the Chinese government wants to see economic growth, so I think they'll take measures to support that.
Brace yourself. There's no smooth gear change for where I'm going next. Now, bring this back to Australia. We are great at digging holes. In fact, I would say we're damn near international experts at digging a big hole, putting stuff on a boat and sending it to China to be refined. How do we get Australia to embrace the downstream process? Because we are really good at digging holes, but we don't seem to be really good at refining it, even though there is a lot of talk about making that happen.
Well, I think you're absolutely right. Australia is possibly the best mining performer in the world. Certainly when it comes to big mines, iron ore and coal, even copper, they are world class, and they are operated in a way that is just simply, amongst the best in the world. The question always is, well, how do you, if you want to capture more value and go downstream, how do you actually do that? And this is where Australia's traditionally fallen down, because there are several reasons for this. One is we don't have cheap energy, we don't have cheap labor, and we have a relatively strict regulatory regime, especially vis-a-vis some developing countries, and all of this adds to costs. So can you overcome those obstacles? Well, I think you'd have to be very careful how you do it. if I was sort of looking at an industry where I thought there was scope to move downstream, I would probably pick lithium, because refining the lithium, getting it into battery grade material, is not as labor intensive a process as, for instance, making steel. And it can be done. I think the other thing is you have to do, if you really want to move downstream in Australia, you have to get more regulatory settings. What is going to actually work is we need cheap energy. So you need to encourage the building of a whole range of renewables and storage solutions that are going to enable cheap energy. So that's kind of the government allowing fairly large swathes of land to be turned into solar farms with battery storage facilities as well, offshore wind, all that kind of stuff. But you really have to have cheap energy. That's the sort of Chinese superpower is. Yes, it's mainly coal-fired in China, but it's cheap. So that would be, how if you wanted to do like, DRI, iron into steel, that's the key, is the cheap energy. Otherwise, your sort of scope for doing these things is much more limited. If you want to, I know there's a sort of thinking in the West that China's now a strategic competitor and that we should try and move away from China as far as supply chains go. So we need to refine more things, be it lithium, be it nickel, be it copper, all those kind of things, and try to get China out. Quite frankly, that's going to be really, really difficult. And the Labour government's sort of $4 billion commitment to sort of make this happen it's not even a spit in the bucket. It's a grain of sand on a beach. A spit in the bucket is what the Americans have done with their Inflation Reduction Act, which has nothing to do with inflation at all. But it's that's more real money, but even that is not going to be enough. If you really want to build a supply chain for critical minerals outside of China, you're talking trillions of dollars, not even hundreds of billions. You're talking trillions to make that sort of thing happen. And I can't see Western governments funding that, and I certainly can't see Western private industry funding it either. So I think a lot of this is pie in the sky. But there are scope for smaller scale things where you can do certain things in the downstream space that would make sense. And some refining of critical minerals would definitely be there, but it would be like your small scale stuff, so lithium, rare earths, that kind of stuff.
So you've pointed out two things that are basically stopping Australia being able to embrace the downstream processes meaningfully, and that is the cost of energy and the cost of labour. Now, I don't think there's a single Australian who will volunteer to take a pay cut to make this happen. Does this mean we're going to see the rise of partnerships with basically what we term friendly allies, or embracing nearshoring in order to bring that supply chain or the downstream processing chain closer to home? Or closer to our watch, maybe, is where I'm going.
Yes, I think if you were sort of looking at that, well, if let's say we don't want to send our raw ores to China for processing there, we want to send them to a more friendly country, which has still got those competitive advantages of cheap labor, cheap energy, and perhaps a slightly looser regulatory framework. There are certain countries in Asia that meet those criteria, but there's still a risk because they might not always be your friends. Times change, things move on. Is Indonesia our friend, or is it a competitor? Is India? We have a good relationship with India currently. Will that remain? So you have to sort of think about those sort of things. But I think there's definitely scope to do that. The other thing that you have to work out is who's going to pay. So you've got to attract capital. Now, here's the other thing about China. It's not just that they're very good at doing the refining and the downstream processing. They have the money. So if you want to actually build a mine in Australia and you say, well, I want to build a mine and then I want to build a solution to actually process the minerals, at least to the next stage, there's not a lot of money in Australia to do that. The people who have the money are the Chinese. They're happy to do it. But that doesn't really solve your problem. In some ways, it actually complicates it. So, to my mind, you need a whole rethink on how we source capital for the mining industry.
I'll come back to that whole rethink of how we source capital for mining, because we know right now it is a tough money for junior explorers to raise money in. But I want to, while we're talking about minerals in China, I want to talk about uranium. Now, there is a connection here to everybody listening, I promise. Look, Peter Dutton's calling from the sidelines now quite loudly that Australia should embrace nuclear power in the lead up to decarbonisation. Now, I know we've got a thriving exploration uranium sector. But we don't have any ability right now to move towards nuclear, which would help meet these decarbonisation goals. Now, is this a pie in the sky dream that you were talking about before? Can Australia realistically create a nuclear industry from scratch?
Well, it can be done. Like everything, it can be done. It will be massively expensive, way more expensive than the coalition is trying to tell people. It will require massive amounts of capital. It will require a massive amount of immigration of skilled people to run it. Australia doesn't have nuclear engineers. It doesn't have people who've operated a nuclear power plant. And, so leaving that aside, where are you going to build it? Nuclear power plants need water, because most of them work on the basis of they're cooled by water. So you need to build it somewhere close to a major city, because you don't want to have too much in the way of transmission networks. You need a water source to keep the thing cool. And can you imagine any community in Australia, even the most right-wing coalition seats in Queensland, being happy with a gigantic 1 gigawatt nuclear power plant being built in their local backyard? I can't see it. If it would, make the sort of Franklin Dam protests and the forestry wars and all those kind of things, the objections from the public to it would be absolutely massive. I can only see this as the coalition playing games. They were in power for 9 years up to 2022, and they didn't do a diddly squat about nuclear when they were in power. Now suddenly it's the solution to all our problems. It's just laughable. They also like to talk about small modular reactors. Again, I mean, this is a technology that doesn't exist. The main proponents of it in the West have actually just sort of scaled back, and they're not quite collapsed, but they're not really making much progress. But let's just assume that it actually works as a technology and it will be deployable sometime in the 2030s. Again, can you imagine any community in Australia wanting one of these things in their neighborhood? Oh, don't worry, we're just putting up a shed there and we'll stick a little reactor in it. It will be fine. Can you imagine the level of public opposition to that? It's just, it's a pipe dream. It's a distraction. And I guess I'm not a political analyst, but I guess they're playing politics and they see some kind of advantage in this. But if you're actually having a serious conversation about energy markets, nuclear is not a solution in Australia. And it's not that I'm anti-nuclear. I actually think if you have a nuclear industry, you should keep it. I think the French are doing the right thing in renewing plants, building more. I think the Germans were crazy to turn theirs off. It certainly forced them back into using coal, and it made their energy security less than what it was. So it's not that I'm anti-nuclear in any shape or form. I just think if you're going to build an industry from scratch, you have to be realistic about how much that costs and where are you going to put it. And these are things that just wouldn't work in Australia at all.
I very unfairly have two follow-up questions for that, and I don't know which answer I want more first. First of all, you mentioned a great thing that it's got to be near water. Now, I don't even know how much water is needed for a nuclear power plant, but you're right, nobody in Melbourne's going to suddenly put their hand up and say, yeah, I'd love to have that in my next door. So can it be something that operates on seawater, or is it something that would be competing with, we're a drought-stricken country. We can't afford to have our freshwater resources being sent to keep a nuclear power station cool. So does it run on seawater? And then I'll get to my follow-up question after that.
Well, you can run them on seawater, but you have to desalinate it. So it just adds to your cost, and obviously you lose some of your energy because desalination is a very energy-intensive process as well. So there is, I believe, in the works plans to have nuclear reactors that can be cooled by seawater without desalination, but at the moment that's not an available technology. So no, you could use seawater, but then you add desalination.
Awesome. Thank you for clearing that up for me. I didn't know. Now, my second follow-up question to your original answer is you mentioned that there's nobody here to even run a nuclear power plant. That also means there's nobody nearby who knows how to build these things. Where would we even start if we really wanted to just turn out, if politics turned on a dime and yes, we're going to build the nuclear power stations because we found it and we've got the public to agree to it. Who do we partner with to build these? Because we do not have the resources here to do that.
Well, you can partner with the French. They actually still build nuclear power plants, although if you look at the one they're building in Britain at Hinkley Point, it's massively delayed, massively overpriced, and will produce the most expensive energy the UK has ever seen once it actually is finally commissioned. So, yes, the French have the technology and they have the knowledge and they have the wherewithal to do it. America, they still have nuclear power plant companies, but they're not really that active in building new ones, so it would be difficult. Japan is basically out of the nuclear power game, at least as far as construction goes. So the people that are building the most and are actually doing it at quite a rate are the Chinese. So again, would the Australian public be happy with the idea of Chinese technology, nuclear power plants? Now, don't get me wrong. I'm not saying there is anything wrong with them. The Chinese nuclear industry seems to operate very safely and at a very high level. And certainly their designs are actually more modern than most of the Western ones. So it's not that they're a bad technology or that they're inferior in any shape or form. They're not. But would you want to partner with them in order to develop a nuclear power? I mean, I'm always amazed that journalists just don't really ask Peter Dutton these hard questions, or Matt Canavan. It's like, where are we going to get this stuff from? Who's going to pay for it? It's unbelievable that these people actually think they can have a serious conversation about nuclear, but they just have no real idea what they're talking about.
That's a really refreshing answer you've given me to my past three questions, because you're right. Look, I'm pro-nuclear as well. I would love to see a nuclear industry established in Australia. But you've just mentioned some roadblocks that I never even thought of previously. So thank you very much for that answer. But speaking of not asking the hard questions, we talk about funding our mining sector, and our miners are struggling to attract capital at the moment. I know ESG obligations are actually causing problems for some banks trying to fund these projects because miners aren't meeting certain criteria along the way. I'm not naming names. Tell me, how do we fund these miners? And this, I guess, is, we can draw this out to the energy transition. We know we need an enormous amount of metals and minerals to make this happen. But how do we make sure that our miners have the funding that they need in order to, meet these goals that we're setting?
I think that's really the very, very difficult question. I mean, like you, I was at the IMARC conference recently in Sydney, and there was a whole tent, if we want to call it that, filled with junior miners basically seeking capital. And, I sort of wander around and talk to them. Some of their projects are, shall we say, iffy, but some of them are actually quite good. They have proven up the resource. It's a mineral that's going to be needed, and yet they're just not getting any funding. So the traditional model of funding, where they raised equity and they were effectively penny stocks, and they advanced the project to a point where a much bigger fish came in and swallowed them up and then took it on and actually developed a mine. That's not really happening so much anymore. It's quite difficult. I mean, I was talking to one mine developer who's got a rare earths project out in western New South Wales. They are basically ready to go. The resources there, environmental approvals are there, mine plan, the whole thing. And they're really, really struggling to get the money. And this is something that is, the minerals that they will produce are genuinely needed. They will, not the market for them is going to exist, but you can't get the money. So why won't banks lend to this? I think it's more than just ESG concerns. Banks will only lend when you can show them that you're going to be profitable and that you're going to make money, and therefore you have to make an assumption about the price of the mineral involved. The problem is, for a lot of these critical energy transition minerals, the pricing is vague, opaque, and generally tied to China. And it could, if the Chinese want to collapse the price of lithium and cobalt, they can do it tomorrow. You're then sort of left with, oh my goodness, at these levels, my mine is not viable at all. So you'd have to sort of change the way that the people with capital think about what the likely returns are. Now, this is where it comes down to the sort of idea of, I think governments probably have a bigger role to play in this, because governments could provide guarantees of price. So we're going to build out a separate supply chain that doesn't involve China. We're going to guarantee that this is the price that will be paid for each of these things. I mean, it's almost like a regulated market, like electricity prices. You set a price, and then that's the minimum that is paid. That sort of thing. I'm not sure that, I'm always cautious about advocating for more regulation, but if you want to have the outcome of people actually able to get financing, it's not working the current ways. The junior miners are not being swallowed up by the bigger miners as they get closer to actually, developing and, producing a mine. The banks are not able to finance because the profitability is too uncertain. The super funds just want short-term returns, and there's just simply not enough private capital available to do this. And the traditional route of raising money on the ASX or in Canada through equity placements isn't just working either. So as far as I can see, you have a tremendous need for a whole range of things, but the people who are prepared to do it upstream, i.e. holes in the ground, they're not getting the capital.
You made a great comment there. The short-term returns sought by super funds, and obviously hedge managers as well. Tell me, how much is short-term thinking impacting sentiment in this sector when it comes to raising capital?
I think it's the short-term thinking is now prevalent. If you look at it, I mean, if you are a fund manager, and let's be honest, if you're the chief executive of a major mining company, your window, how far ahead you're thinking, is quarters. It's not years. You're thinking, how do I improve the performance this quarter, next quarter, and maybe for the following two after that. Beyond that, you're not really care, because the chances are you won't be in the job for that long. Most chief executives are 5 years, fund managers probably much the same before they move on to something different. So they're just focused entirely on short-term returns. So there's not really that pool of capital that says, okay, if we're going to build a copper mine, it's going to take 15 to 20 years. But once that 15 to 20 years is there, we're going to have a really working asset. If you actually, sort of swing a little bit around and you look at how they developed the LNG industry, that was effectively big multinational oil companies with very strong balance sheets, able to provide much of their own financing. But even they partnered with clients, particularly Japanese and Korean utilities, to get purchase agreements and a little bit of equity stake into it. And they basically shared that load, and they underpinned it with long-term sales contracts. If you want to see that sort of industry, we had $200 billion invested in LNG in the past decade. And, it took Australia to the biggest producer of that particular fuel in the world. If you want to see something similar in the mining sector, then I think that's the kind of model that you need to follow. There needs to be sort of guaranteed purchase agreements. You need to get the people who want these critical minerals to pony up money and investments. So who wants them? Well, a lot of what they call the OEMs, original equipment manufacturers, so car makers and things like that. It's not inconceivable that Volkswagen or Ford or whatever are going to actually have to, get involved in funding this stuff, because if we are really transitioning our vehicle fleet to electrics, over the next 20 years, there's just simply not enough of a lot of metals around. And that alone will force a change of how things are done. The point is, it's not happening yet. And you have all these guys with these like, oh, we know this stuff is going to be needed and it's going to take us 10 years to build it, but we need the money now. And they're like, yeah, no, they're not getting it.
What's going to cause that to change? And the reason why I ask is anyone who's been in mining knows that it's a multi-decade proposition. You don't dig a hole and then suddenly find yourself exporting minerals the next day. So I understand that we're in a very short-term, quarterly thinking environment, but what will drive that catalyst for change? Because you just mentioned the LNG industry that we built out of nothing. And, now we're a genuine, major exporter of LNG. What's the kick up the arse Australia needs? Am I allowed to swear on this podcast? I'll find out.
I think the kick needed is basically the people who are going to be the end users of these products need to realize that, okay, I'm fine now, I'm fine next year, 2025, I'm probably still okay. But 2030, when all my Ford F-150 trucks or my Hilux Utes are electric powered, am I still fine? I don't think so. Where am I going to get this stuff? Well, the government doesn't really want me to get it from China. Not sure I want to get it from China. That gives them a lot of say in my production. Yeah, I'm going to have to make some changes. And then there'll be a scramble. And then actually, we'll probably actually find one of those things where a lot of projects that shouldn't be financed get financing because people are desperate by that point. And, the group of people who like to mine your pockets rather than holes in the ground, a lot of dodgy things will happen again. That happens in any boom or in any scramble. But I think, we haven't quite reached that point yet. You're starting to see a lot of, particularly the car makers are starting to think, whoa, we need to do something about this. But, have they got their heads around the fact that they actually need to be the providers of the capital? And then, on top of that, you start to need all these people to start banging on the doors of relevant government ministers and saying, we need to speed up these processes. Let's have a rigorous environmental assessment, but let's do it in half the time. And that sort of thing. I'm not saying cut corners. I'm not saying abandon principles and just say, oh yeah, it's a free for all out there. Far from it. I don't want that at all. But I do know that things can be done a lot faster, and that's simply a manpower thing. The governments need to hire people to speed up the processes. They need to be able to do more than one application at a time. I've heard, I may be wrong on this, but if you're actually looking at a state level, one of the major mining states, I'll not mention it just to be on the safe side, but they will only do 2 major assessments at a time. So if you've got 3 major projects coming up, one just sits and waits while the other 2 are assessed. So those sort of things need to change. But that's a government thing. And you have to really, the only way to get this is to keep hammering. But the government needs to be hammered from all sides. It needs the people who are going to be the customers, and it needs the miners, and it needs the bankers, and it needs the investors. It needs everybody hammering them. And then you sometimes get government to actually do stuff.
Yeah, nothing like political pressure from all sides to get things moving. Now, we are going to need to draw this podcast to a close and a couple more questions yet. But I want to touch on the idea of diversity. Now, I recently recorded a podcast with a guest who was very passionate about the lack of gender diversity in both mining and finance. And essentially, those 2 industries do cross over. But, you and I keep meeting great people in this industry. But tell me, does that mean that there's really only one type of person being hired in the industry, and that perhaps diversity is more than just somebody in a skirt or with a different skin color?
Well, I think diversity, yes, I think you need diversity of gender, of race, ethnicity, if you want to put it that way. I think those are important. But the thing that I think organizations need is diversity of thinking. So if I look at the boards of major mining companies, I see some of them have different types of faces, people of color, some have women directors, but they all tend to be effectively the same person. They've all had the same kind of corporate background, the same kind of education, the same kind of experiences. Yes, some are lawyers, some are accountants, but they're all part of that, what I would call the broader club of directors. And they get into that club, and then they just sort of move around and they take positions on boards. Not saying they're incompetent, not saying that they're bad people or they don't know what they're doing. Most of them are very, very smart, but they're all really much the same. There's no sort of environmental activists on boards. There should be. I mean, if you had an environmental activist or a person who came from a background of understanding cultures and things like that, would Rio Tinto have blown up those caves? Probably not. So but I haven't actually seen them put on that sort of diversity. There's a sort of theory. It's called the Israeli 10th man, and in the theory, it's a military thing that every time you have a group, a command and control group, that you are one of the 10 persons on that committee or on that command center has to be a contrarian, has to just ask all the questions about what if, just go through every scenario and think about things differently. So It's a way of avoiding groupthink. And I think, quite frankly, a lot of our mining, banking are basically, hamstrung by groupthink, and they haven't really adopted that idea of we want somebody on the board who doesn't think like us, and we want them because they don't think like us. Most organizations actually like to put people on boards or in management roles who think like them because it's just easier. And it doesn't really matter. And they think they're doing diversity because they do get some women on the board, they do get some people from different ethnic backgrounds, and they think, oh, they're box ticked, look at us. But if everybody's just thinking the same way, then you have really accomplished nothing.
How do we attract people who think differently to the current levels of management that we've got? Because you've made a great point there with the Israeli 10th man analogy. Who's looking in the blind spot? How do you attract those individuals who are going to think differently to the mining sector? And I guess my second point here is this sector able to embrace that different type of thinking?
I think there's lots of people who would quite happily take a position on a board who would be very qualified for it. People, who would have the right kind of education and skills background as well, but are just somewhat different thinkers. How do you get boards to approach those people? Well, it's not going to be done by the shareholders. The super funds that control our major mining companies are not actually interested in having that sort of thing, even though it would be in their interests, because they don't think like that. So you actually need a mold-breaking chairman or somebody to say, hang on, we actually need to do something different. The old ways are not working. What are the chances of that happening? I would say between 0 and 0.01%. They show absolutely no innovation, no thought process that is going to suggest that they want to do things differently. If anything, whenever they have a problem, they tend to circle the wagons and retreat inside the club. And they might kick a few people out. Ooh, you've been bad. Somebody has to be the fall guy for this. But then the people they invite in are just basically the same people, different face, but the same person. So there's no real diversity of thought on the boards. I imagine that many board members would be horrified to hear me talk about them like that. I will stress this is not criticism of your ability, your knowledge, your ethics, or anything like that. It's just a criticism that all of you are the same.
Oh, well, because of that excellent answer, I've got a very unfair follow-up question. You made an excellent comment there about superannuation funds. Now, the last valuation, I remember the Australia Superannuation Fund was like $3 trillion. Now, that number, give or take a few $100 billion might be not correct at the time of recording. That's an enormous number. Like, that is a huge amount of money that is controlled by Australia's superannuation funds. Tell me, does this, given that they've got this kind of clout in the markets, does this basically give rise to financial activism from super funds?
Actually, I think it does the exact opposite. I don't see them being an activist at all. If you actually look at it, occasionally the super funds will vote against a remuneration report, especially if the company hasn't performed well. A certain airline comes to mind. That sort of thing. But are they actually driving boards to be innovative? Are they actually driving boards to say, let's look at long-term things? How are we going to, maintain growth in this company over the long term? I don't really see any of that. It's all short-term focused. I need this X percent return by June 30. Let's do that. If you look at it, the major mining companies took a lot of flack for expanding their iron ore operations on the basis that they saw Chinese steel demand rising. And basically, if you actually look at it, Rio Tinto, BHP, their share prices languished from about 2011 onwards. And eventually, the sort of building chief executives that those companies had were turfed, and they were replaced by operators. And their mission was basically run the assets as efficiently as you can. And they have been tremendously successful at that. But they're not really innovative companies anymore, other than at costs. So they innovate on driving down costs. But are they actually doing more on that sort of stuff? Beyond that, I'm not really sure. If you actually look at what they're doing, their capex plans are really just to replace existing production. They're not actually looking at, what else do we need to do? Now, I know that they're probably discussing this in boards, and there is that sort of, it's all happening behind the scenes. But if you actually look at what's happening in the public space, these are not companies that seem to be doing very much. They're not really driving the energy transition, and they're not saying to the people with the money, if Australia wants to be the supplier of choice to the energy transition, we're going to have to start building this stuff now, and that's going to take capital, and it's going to take a little bit of risk taking, and those are not things that I see at all.
Clyde, there's been some great answers you've given today. So thank you very much for your time. We are going to have to draw this interview to a close. However, I will not let you go without knowing this next one answer. Now, this podcast is called Cocktails and Commodities, and we've talked about a variety of commodities as well as some political angles here. But tell me, when I hopefully next bump into you at an event for a drink, what cocktail will I be buying you?
Ooh, well, that depends.
Okay.
If we're
Give
in
me a
some
list.
place, if we're in some place tropical, I tend to go for a Long Island iced tea. I think you just got to go. That's my go-to cocktail there. But if we're in a sort of more temperate climate, you can't go past a good gin and tonic. But it has to have lime, not lemon.
Yes, completely agree with fresh lime juice.
Freshly squeezed lime. I've been growing a lime tree in my garden for years, and it's finally producing limes. So I'm now happy about that.
Ah, yes, given the price of limes at the supermarket. Well, Clyde, look, this has been fantastic. And hopefully one day I do get the chance to buy you a gin and tonic with some fresh lime juice. In the meantime, thank you very much for being here on Cocktails and Commodities. Your answers have been fantastic. This has been a lot of fun. Thank you.
Thank you. It's been great.
So what did you think? Did you find Claude as thought-provoking as I did? And more importantly, would you like to hear from Clyde again? Because once the camera stopped rolling, he and I were joking about gold and we should do something around gold. And we decided that if we did, we'd call it the zombie apocalypse and where gold fits in. If you want to hear about that podcast, definitely let me know. But more importantly, make sure you leave your comments so we can continue on the conversation. Now, the most important thing you can do for the rest of today is to make sure you're following this podcast to not only see how many different striped shirts that I own, but also so you know what stocks are making news, which commodities are moving markets, and the companies trying to get it out of the ground.